Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane, I'ma do it all for you.
Welcome back to the channel, where we bring you the latest news and insights on the financial markets. In this video, we'll be discussing the latest market developments and the big economic report coming tomorrow before the market open. From equities adding to this week's gains to continued labor market strength, we'll be breaking down the key takeaways. Plus, we'll be diving into the three things that could affect markets tomorrow, including the Fed's preferred inflation reading, personal spending and income, and the latest University of Michigan consumer sentiment reading. So, stay tuned to get a better understanding of the state of the economy and what the markets may have in store for us in the coming days. Let's do a quick recap of today. Stocks closed higher on Thursday, continuing the week's gains. The real estate, technology, and consumer discretionary sectors outperformed, reflecting a more positive cyclical undertone in the day's move in equities. The Nasdaq was also higher, rallying nearly 10% over the last 3 weeks as technology stocks benefited from the pullback in interest rates. Despite a slight increase in initial jobless claims to 198,000 for the week, claims remain low, with this latest reading marking the 10th week in the last 11 below the 200,000 mark. Continuing jobless claims didn't move much versus the prior week but are running about 20% above the trend from 6 months ago. These latest readings indicate that ongoing low initial claims reflect ongoing strength in employment conditions, as there is not yet a wave of new job losses. However, the rise in continuing claims over the last several months signals that it may be getting slightly tougher to find a new job. Employers are seeing sufficient demand that warrants holding onto existing workers, while at the same time pulling back on the rate of new hires amid a weaker economic outlook. All in all, the labor market remains the brightest spot in the economic landscape and should provide support to consumer spending that will soften the pace and length of an approaching slowdown in economic activity. The focus has shifted back to rates and the economy after the most acute fears over a potential growing wave of bank failures subsided somewhat this week. Reports indicate that lawmakers are considering additional proposals to reinforce stability, including new requirements for smaller banks that could include higher capital and cash levels, as well as regular stress tests, in an attempt to limit future challenges similar to those experienced in the SVB and Signature Bank failures. We suspect the most impactful fallout from this situation will be tighter lending standards and slower loan growth from small and mid-sized banks, likely adding to the economic slowdown that we expect this year. Tomorrow's key data report that the Fed will be looking at is the inflation numbers for February. Analysts expect the growth in spending and consumption slowed in the period, which happened before the bank turmoil in March disrupted sentiment even more. Futures traders are about evenly split on the Fed's next move. About half of them are betting on a rate hike of 0.25 percentage point, while the other half believe the Fed will pause when it next meets in May. Investors will also be listening to executives during first-quarter earnings reports to see if their forecasts for the year have shifted any with the prospect of the Fed getting closer to the end of its rate hiking. This could potentially affect markets tomorrow, along with 3 key economic reports. 1. Core PCE. The Fed's preferred inflation reading is the Personal Consumption Expenditure Index, which is expected to be released at 8:30 Eastern Time tomorrow, 12:30 Greenwich Mean Time. 1. Analysts predict that the core PCE, which strips out energy and food prices, will rise 0.4% from the prior month and 4.7% for the year through February. 2. Spending and income. Another batch of numbers focuses on spending and income, due out at 8:30 Eastern Time. 2. Personal income is expected to rise 0.2% for the month, and personal spending is expected to rise 0.3%. 2. Both would be at a slower pace than the previous month. 3. Michigan sentiment. The latest University of Michigan consumer sentiment reading is due out at 10 o'clock Eastern Time. 3. Analysts expect the March reading to be 63.2, a tiny dip from the prior reading. Overall, the markets will be closely watching these economic reports to gain a better understanding of the state of the economy and what the Federal Reserve's next move might be. The reports could also impact investor sentiment and influence trading activity in the near term. In addition to the economic reports, market participants will also be keeping a close eye on any new developments in the ongoing banking crisis. While fears over potential bank failures have subsided somewhat in recent days, there are still concerns about the overall stability of the banking system and the potential impact on the broader economy. We will be watching latest development with Metropolitan Bank, which dropped nearly 28% during trading session. If MCB were to face similar problems as other banks during recent crisis, they could go under as they lack collateral that it could post in order to preserve liquidity. Furthermore, the upcoming earnings season will also be a major focus for investors. The majority of S&P 500 companies are set to report their first quarter results in the coming weeks, providing a glimpse into how businesses are performing amid the current economic environment. Investors will be paying close attention to any commentary from company executives about the outlook for the rest of the year, particularly as it relates to the potential impact of rising interest rates. Overall, the next few weeks are likely to be a period of heightened volatility and uncertainty in the markets. As always, it's important for investors to stay informed, maintain a long-term perspective, and avoid making impulsive decisions based on short-term market fluctuations. As always, it is important to stay informed and keep a close eye on market developments as they unfold. Maintain a long-term perspective, and avoid making impulsive decisions based on short-term market fluctuations. Thank you for watching, and we hope you found this market recap informative. Also help us out by liking the video and subscribing. Let us know what's on your watch list down in comments.